From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We just heard from the Secretary Scott Bessent alongside other cabinet officials at a cabinet meeting live in the White House. Thanks for joining us on Bloomberg TV and radio. This is Balance of Power. I'm Kailey Leinz alongside David Gura in Washington, as we were just hearing multiple cabinet officials talk specifically about tariffs. The Treasury Secretary Scott Bessent saying that there is a process being put into place for negotiations in which he will be involved, but President Trump himself will be involved. And President Trump began this cabinet meeting with the press assembled in the room by saying that they are working with a lot of countries, though he did note there will be transition cost and transition problems as we go through this. We also heard from another important voice when it comes to this administration on trade, the Commerce Secretary Howard Lutnick, saying that countries want to talk and they want to talk now, suggesting they're coming with offers they never would have come with without President Trump's policies. So perhaps no surprise, David, that they're obviously very focused on trade given the developments of the last 24 hours, the pause in the 90-day pause in reciprocal tariffs for most countries, hence leaving room for these negotiations that the tariffs on China remain in place and actually elevated to at least 145%.
And the Commerce Secretary allowing there's hardly enough time in the day to talk to all of these countries who are calling the White House now, trying to talk through what a deal might look like for each of them. Again, a fairly short time horizon here for all of these deals to be worked out. And we see the president sort of making his way around that cabinet table in the cabinet room. If, in fact, he fields questions from reporters at the conclusion of that, rest assured we'll go back to capture some of that for you here on Bloomberg Television and Bloomberg Radio. I want to turn on to Michael McKee, our international economics and policy correspondent, who has been, listening in as the president and his team have been speaking, but also paying very close attention to the 30-year bond auction that we saw just a moment ago, and also the undulations that we have seen and continue to see in the markets, both in the bond market and the stock market, and to the economic data that we got as well, the CPI data this morning. Mike, I just want to get your reaction to what you heard there and maybe give us your sense of sort of what these next 90 days look like. Here we have an administration eager to broker deals, as we heard there in that meeting. That's meeting with the realism of how difficult it is to broker trade deals historically, all the nuances and details that go into them.
Well, I took a year, more than a year, to renegotiate NAFTA, and almost nothing was changed in that treaty that came out as the USMCA. So I think you have to approach what this administration is saying about these deals with a great deal of skepticism. For example, we heard there, and we've heard from others in the administration, that 70 countries have approached the administration. But Kevin Hassett said this morning on one of the other networks that there are 20 countries. So, I mean, what is the actual truth? And what are we actually going to get out of it? And how much of this is going to be tariff reduction? And how much of this would have anything to do with non-tariff barriers? I mean, remember, they went after the Europeans and the British for having a VAT tax. Does that get addressed? Yep. So a lot of reasons to be skeptical about what they're talking about. But what we can say will happen is if these other tariffs that are already in place stay in place, we will see prices go up and we will see the economy slow down. It's going to be very interesting. These are very heavily weighted, obviously, towards China, and we import a lot of stuff from China. So how is that going to affect the American consumer's psyche if they can't get things from China?
Well, and investor psyche as well. After the remarkable gains of yesterday, the best day since 2008, obviously we have a massive reversal on our hands with 5% losses on both the S&P 500 and even greater for the NASDAQ 100. And we know markets did play a role in the decision-making of President Trump yesterday, though he was specifically concerned about the bond market, talking about queasiness, Mike. And I wonder if a little bit of that queasiness has been abated, not just by the tariff moves, by once again, for a long-duration Treasury auction, the 30-year yield, it looks like demand was a bit better than expected.
Yeah, the 30-year comes in reasonably strong. It stops through 2.7 basis points, about what we saw with the 10-year yesterday. It does suggest that people are out there looking for duration. Dealers took less. Directs, though, took a lot more than they did yesterday. Direct bidders and indirects were down a little bit from their average, but still relatively strong. So not a major change in the auction statistics, but a well-received auction in this case, as was the 10. So that may supply a little more confidence to people in the fixed income markets about foreign demand and overall demand for U.S. Treasuries. There's been some talk that people were backing away from investing in the U.S. I think the equity markets are reflecting what normally happens in these kinds of situations where you have a big turn down. This is what we've seen before, where you get these rallies and then stocks go back down again. Very much the pattern after 2008. After Lehman Brothers. So you just have to wait and see how long that takes to play out and where people start to find value again. And it may be hard to do in the sense that people can't trust exactly when all this tariff news is going to stop and we'll have what there is.
Mike McKee, at the start of that meeting, the president remarked on the inflation data that we got today, the CPI data, and he said, quote, "There is no inflation." He then corrected himself. There's very little inflation, he said. We know that those data are looking backward, not forward, and there's a lot on your agenda today. You couldn't escape for the speech that Austin Goolsbee, the Chicago Fed, gave at the Economic Club of New York. But he brought this up and talked about the inflationary aspect of these tariffs and indeed the difficulty that it's going to pose for Fed policymakers going forward here, having to navigate, yes, these kind of inherently inflationary policies, but also what we saw over the last 24, 36 hours, that being a chief policymaker who's making a quick reversal on his policy priorities, seemingly. Talk a bit about that, the way that central bank policymakers, yes, the ones that you cover most closely here in Washington, have to focus on, but those around the world who are trying to figure out the direction of policy going forward here and how they sort of complement that.
Yeah, it is an issue for central bankers around the world, but a little different in different places. It is possible that because the Europeans, for example, will be putting on, if they actually follow through, lower tariffs than we're putting on, and it depends on what they tariff, they may not have an inflation problem. They may have more of a disinflation problem. And so the way they're going to approach this is different. Because the U.S. is driving all of this, we can have a growth slowdown and we can have inflation rise. And pretty much all of the Fed officials who have spoken this week have addressed that conundrum for them. What do they do in that situation? If you raise rates to bring down inflation, you might hurt growth and vice versa. So they're all saying we've got to be careful. We can't make decisions right now. We have to watch what happens. They've sort of all leaned into the idea that inflation is the thing that would matter more. But the formulation that they've always used is we'll look at which number is deviating the most from where it should be and attack that. So the bottom line message from them all is it's going to be tough on us. Don't get mad. We'll get around to it when we have some idea of exactly what we're doing.
All right, Michael McKee, Bloomberg International Economics and Policy Correspondent. Thank you so much for joining us as we're keeping an eye on financial markets. We may be off of session lows, but the NASDAQ 100 right now down 6.2%, still on pace for its worst day since March 2020. So let's get a check on the latest with Charlie Pellet in New York. Charlie, I'm having COVID flashbacks for sure.
Certainly a day of fast-moving developments. We got you covered on Bloomberg Television and radio. Let's recap and reset here in terms of U.S. markets as our market coverage continues. Investor psyche does remain fragile. We are on track for the fifth decline in the last 6 sessions. Right now, the S&P is down 5.4%. Keeping that in context, you run the HCPI function on the Bloomberg. We were down 6.3% at the worst level of the session, but right now, a drop of 5.4% on the S&P. We're down 291 points. The S&P at 5164. The Dow down 1,866 points. That is a drop of 4.6%, with the NASDAQ Composite Index down 1,050 now, a decline of 6.1%. The Russell 2000 Index of small cap shares down 6%. NASDAQ 100 Index also down by 6%. Bottom line here, another day of steep losses for the U.S. equity market. 10-year 4.35%, the 2-year 3.81%. Gold is up $76 the ounce, up 2.5%. $31.59 the ounce on spot gold, and West Texas Intermediate crude is now plunging by 5%. WTI $59.24 a barrel. So bottom line here, steep losses again, fear engulfing Wall Street, with the S&P now down by 5.4%. Our market coverage continues on Balance of Power. Back we go to Washington. Once again, your hosts, David Gura and Kailey Leinz.
Charlie, thank you very much. Charlie Pellet there in New York, following the markets for us as we look at the sell-off this afternoon. Gold, that glimmer of green in a sea of red. As we look at this kind of violent reversal, and I'm kind of curious here, Kailey, to watch all this unfold, sort of what fundamentally has changed? Yes, I think we can all agree it's a good thing that a trade war isn't being fought on 70-plus fronts. But it seems like the biggest battle, the most fundamental one here, is between the U.S. and China. Yep. And we were talking a little while ago just about the notion of decoupling and sort of where we are in that conversation. But a very deep divide now between these two economies. And I think investors are reckoning with the fact that that's the case.
Well, and it's not just any two economies. It is the two largest economies in the world. So while it does have major ramifications for both the domestic economy and the Chinese economy, there could be ripple effects across the globe as well, as we consider that when you add on the 20% fentanyl tariffs to the now 125% reciprocal tariff President Trump has placed on Chinese goods, that gets us to at least 145. And of course, China has slapped 84% tariffs back in the other direction on U.S. imports. And that leaves specifically tech companies incredibly vulnerable. If you're an Apple or an NVIDIA with that China exposure, perhaps the euphoria of yesterday is giving way to a bit of a reality check on that front today. And it's on that note we go to Mike Regan, Bloomberg senior editor, joining us from New York. And it is remarkable, Mike, after the best day since 1998 for Apple yesterday, that stock down 6.5%, NVIDIA taking it on a chin as well. It does seem that technology stocks are looking particularly vulnerable in this Thursday selling.
Yeah, Kelly, and I would sort of reiterate what Mike McKee just said about whenever the market has one of those just insane rallies like we saw yesterday, that doesn't necessarily inspire the type of confidence you would think it would. Wall Street traders are all too familiar that those type of eye-popping rallies really only happen in the middle of bear markets. We saw it in COVID, during the financial crisis, and many other bear markets. So I think when you think about the difference in mood from yesterday and today, yesterday, the rollback or the delay of the tariffs for 90 days was certainly good news. It wasn't likely worth almost 10% in the S&P 500. What seems to have happened, according to a lot of investors and strategists, and just looking at the data itself, is that there was a massive short covering. When you think about some of the most sophisticated, biggest hedge funds and other investors in the world, many of their strategies actually can be boiled down into something very simple and trend following. We've had this downtrend in the market since the middle of February, and that just inspires a lot of traders to short this market, to borrow securities in hopes that their prices will go down further and they can buy them lower and sort of pocket that difference when they repay that loan. So a big part of that rally yesterday, I think, was short covering. That happened in a flash, and now it's over. And we're back to really thinking about these fundamentals and the uncertainty around the fundamentals and the market resuming that downtrend.
I was reminded of something I read from Remark's Neil Dutta yesterday in light of what you said there, Mike. He wrote in his latest note, when markets rise 10% in a day, it's not a sign that things are healthy. I think getting at the point that you were making there. What is your sense from going through notes this morning and sort of getting a sense of where the market is today, of what investors are looking for here, what that kind of clarity is that they need to see here? There was that allowance from the president yesterday that he intends to be more flexible than we thought he was going to be going into this, perhaps an indication that he's willing to carve out some exceptions, something that he and his economic advisors had sort of ruled out flatly at the beginning of this process. What more do investors need to see here to kind of cheer them, or is this something that you think we're likely to see going forward over these next 90 days, this kind of anxiety about the uncertainty, sort of how these deals come together?
When it comes to that sort of looking for clarity, David, one of the really, I think, most illustrative things I read this morning was from our colleagues writing about Walmart. Walmart basically told one of its suppliers in China that produces Christmas ornaments, don't put the price tags on the ornaments. That was typically the last thing they did before shipping them out. Walmart would tell them, put this price on each item, and they'd ship them out with the price tags on them. Now they're saying, don't put those price tags on these Christmas ornaments. And that really, I think, speaks, it's a great anecdote that speaks to the unknowns throughout not only the C-suites of companies like Walmart, but in the spreadsheets of investors trying to figure out exactly what to expect for the rest of the year. You know, we've seen Delta pull its earnings guidance. We've seen CarMax pull its earnings guidance. A pulled earnings guidance is almost as alarming to investors as a reduced earnings guidance. In some ways, I think they would prefer to see that. At least there's some numbers to work with. When a company completely pulls its guidance and says, we just don't know what we're going to make this year, it's very alarming for investors. And that's really the clarity, I think, from the Wall Street, from the trading side of things, is clarity on what that earnings outlook is going to look like. And there's just none to be had right now because of all the issues, all the uncertainties, and lack of clarity from Washington. Trump is famously can change his mind from day to day and increase tariffs, pause them, eliminate them. And, he's just impossible to predict. So that just sort of feeds into all the decision makers in the C-suites around the country and the world, really, and all the investors trying to put a value on what these stocks are worth. And it's just a very hazardous situation when you don't have answers to all these questions.
Mm-hmm. Well, and Mike, that's an excellent reminder that big bank earnings kick off tomorrow. JP Morgan will be reporting at 7 a.m. Eastern time on Friday. For banks that came into this year thinking there was going to be a revival in animal spirits, investment banking fees potentially were going to fly. Obviously, we're living in a bit of a different reality. You were just speaking to the idea that earnings guidance is getting pulled, but we've seen IPOs pulled as well due to the volatility in markets right now. And I wonder what you're expecting the banks might be signaling tomorrow and how much of a catalyst that could be for wider equity markets.
Right. Well, they're in the books earnings through the end of March won't tell us a whole lot just because a lot of this turbulence has happened since then. For this current quarter, I mean, some of the big banks, that have trading desks might be able to put up some great numbers for those trading desks. But those don't tend to really impress Wall Street investors because they do come at the expense of everything else you're talking about, IPOs being pulled, likely some M&A that is being reconsidered. And it just, it's going to be a volatile outlook for the banks. I think the remarks, especially from the likes of Jamie Dimon, will be the most important thing. Again, the banks aren't going to be able to give us any more clarity than anyone else can. But as we've seen, even yesterday, the words of someone like Jamie Dimon mean an incredible amount to investors. So I really think his conference call remarks will be must-see TV, or at least must-listen to earnings call for all of Wall Street coming up.
Mike Regan, thank you very much. Mike Regan, senior editor on markets in New York. And I think back on what he just said there, we've heard an awful lot from President Trump this week. Maybe second to him, we've heard a lot from Jamie Dimon. There was the lengthy letter that he wrote to investors earlier this week, followed by that interview, which was in a way kind of unprecedented here during a quiet period before earnings, going on Fox Business and having a long conversation about the economy with Maria Bartiromo. And then, as Mike was alluding to there just a moment ago, the comments we expect him to make on the earnings call that JP Morgan has in the coming days. I want to go to Terry Haines now, the founder of Pangaea Policy, and I suspect that he was shaking his head as I was asking Mike Regan for sort of a sense of the rational response that we might see in markets to what the president is doing here. Terry, we talk a lot about sequencing in the context of the president's legislative and economic agenda. Let me ask you about sequencing in another context. That is, how this White House, how this administration goes through what they say is a long call log, a long list of countries and trading partners eager to meet with this administration to hammer out deals. They want to send a sign to the markets, to Americans, that in fact they're making progress. Who needs to be at the top of that list? Who should they be prioritizing as they go through the sequencing of these trade deals?
Thanks for having me. I think they should sequence in a couple of different ways. One, they should probably look at the United Kingdom, Europe, but not of it, so to speak. I'd also look at major unaligneds, particularly India. India is hugely important, and working out some deal with Modi would be a great signal. Let's remember just 2 months ago in Washington, Modi came here and talked about MAGA plus MEGA, make India great again, equals mega. So maybe Trump should figure that out. And finally, somebody in the Asia Pacific, either Japan or Australia, would be very good. I think those three would send large signals about the seriousness and kind of the direction of travel of the administration.
Well, as we talk about the seriousness of the administration, Terry, and it's great to have you back here on Bloomberg TV and radio, I wonder if you see any kind of credibility dent that the administration is now going to have to contend with as it conducts itself in these negotiations, considering, once again, we have seen an extreme change in tariff policy and a flipping and flopping of the narrative. Does that actually give these other countries who are coming to the table a little bit more leverage? Is there a bluff to be called at some point?
Oh, sure. There's credibility gaps all over the place. There's a credibility gap on the part of the administration to some extent. There's an awful lot of allies and friends of the United States that feel whipsawed and feel bruised in a lot of different ways, and this pause does a lot of things. But one of the things it does is gives Trump an opportunity to right-size those relationships and frankly reassure people. One other thing that we should all be aware of too was that Lutnick's people at Commerce were out to a number of major countries, and I assume others as well. I know of a few that giving people a laundry list of what they wanted to talk about, both in terms of tariffs and other sorts of trade barriers, before the tariffs even went into effect. So, I will give the Trump people good marks for being able to talk to allies and friends and others before all this started. So hopefully that can help push things. Thirdly, I would point out as well, I thought Mike McKee gave a very good summary of all of this a few minutes ago on your air. One thing I would add to that, though, is that countries may well be able to come to deals by making future promises. The United States itself does this by saying, we're going to reach a deal to do X, Y, Z on trade, and as part of that, we promise within a certain period of time we're going to pass legislation, we're going to change rules, whatever. Those countries will do similar things, I think, in order to make deals.
It must be grading season. We have here Terry Haines giving his marks to the White House. Ira Jersey, our chief rate strategist for the U.S., giving his marks to the auctions that we've seen over the last couple of days, giving the 10-year auction an A+ and a 30-year auction an A, saying that they were really solid. Makes me ask you, Terry, sort of how you look at this administration's visibility into the markets and their response. You wrote earlier in a note that perhaps the White House, we've misjudged how much this president cares about market moves. And I think yesterday we saw perhaps an indication that it's still something that the president cares quite passionately about, that he could see those startling moves in the bond market, for instance, and feel like he has to do something, that things aren't going to course. Do you care to revise the statement that you made earlier? Have things changed this week vis-a-vis our sense of the way that the president looks at the markets?
No, I won't revise. I will extend my remarks, though.
Fair enough. You may.
On Capitol Hill. I will extend my remarks in this way. When markets say, geez, Trump cares about the markets, I mean, to me, that's a illusion and a rationalization extraordinaire, because they don't really mean Trump pays attention to the markets. What they mean is we, the markets, are actually the masters of the universe, and Trump will do as we wish. Well, I've been telling markets for a couple of months on tariffs, that's not going to be the case. The reason why it's not going to be the case is because the goals here are geopolitical. This is not set 2017. The reason why it's not is because economic policy is roped and yoked to geopolitical goals across the board. And, you can even see that with tariffs, where some of the tariffs exist for geopolitical reasons. So, presidents don't think about the markets all the time. The markets are not the only thing that needs to be dealt with. And, so what I would say to folks is that, you've shown, or as Trump has shown, that he's certainly interested in where the markets are on these things, but he's not paying sole attention, and he's not gonna dance to markets' tunes. Number one. Number two, I think the other thing we need to remember here too is anybody on Wall Street that's self-congratulating today shouldn't. because one of the reasons why these tariffs happened is essentially that Wall Street let them happen. You know, in Washington, silence equals assent. If you're silent, that means go ahead. And they didn't really raise any objections to what was about to happen until well after it happened.
Well, it's a very fair point. Certainly, we're seeing, it seems, some protest happening now, looking at the red on my screen, Terry. Also on my screen, I would point out we are still paying attention to the cabinet meeting at the White House, which is ongoing. The president has gotten reports from almost every cabinet secretary at this point. The Secretary of the Interior, Doug Burgum, is speaking now. As you can see, if you're with us on Bloomberg TV or on YouTube, we still have Secretary of State Marco Rubio to hear from. And then the president may well start taking questions from reporters. We'll dip back in for those if indeed that happens. In the meantime, though, Terry, as you speak to this idea that the president isn't exclusively focused on the markets, what have you learned this week about the influence others in his administration may have in interpreting the market action and then shaping presidential policy by extension, as we understand that Scott Bessent and Howard Lutnick presented a kind of united front to the president yesterday, which helped lead to this change in tariff policy? Is this actually a sign that Wall Street's initial expectations of Scott Bessent being kind of a steadying hand, if you will, when he was tapped for this position may indeed be serving in that role?
Markets still have a policy concern, of course, and in large part because this is a pause. It's not a volte-face or a throwing away of the policy. And Trump still has a lot of urgency around this. So markets are right to continue to be concerned. Where I think the White House has improved here is, though, in communication message, something that's important. And we've been talking for 6 months now about the so-called team of rivals that are headed up by Bessent and Lutnick. And I think what you saw yesterday here is Bessent put pretty much in charge of the messaging to Wall Street, while Lutnick is supposed to be responsible for the shepherding forward of negotiations and potential deals. Bessent has a foot in two camps right now. Bessent is trying very hard to push the tax cuts bill, and they'll try to push a bill and get it done, frankly, I think within this 90-day period. They have a pretty good chance of being successful at that. But at the same time, Bessent's going to continue to be the soothsayer for Wall Street, and that seems like the right conclusion for the Trump people to reach, since Bessent tends to stoke some confidence where I think Secretary Lutnick, for rightly or wrongly, doesn't.
Terry, you've mentioned a number of names there, and one that didn't come up is Jamieson Greer, Ambassador Jamieson Greer, the U.S. Trade Representative. And there was that photograph that we saw from the House hearing yesterday where the Truth Social post went out, and an aide had to lean over toward the U.S. Trade Representative and show him what the president had done. Where does he fit into this pantheon of economic advisors, and what does that tell you? Is it at all worrying that the man who has been charged here with trade policy wasn't in the Oval Office yesterday as Howard Lutnick and Scott Bessent and President Trump sat down and pounded out that poetic, important post on Truth Social?
Well, the USTR is typically given cabinet rank, not always by every president, but typically given cabinet rank. But at the end, not only does he get his power from the president, but he's essentially a staffer of the president. I mean, they all are, but they're not cabinet secretaries or anything else. And the USTR in this case, I think, is treated a little bit more as a staffer than as a peer of Secretaries Bessent or Lutnick. I also think, in Greer's defense, he's pretty new to this. Just got confirmed very recently, and probably not quite as up to speed on it as everybody else. But I think the net of what you point out clearly is that the three people who are in charge of all this are the president as the decision maker, Bessent as the person who has his eyes most clearly on the markets broadly, and Lutnick is the person who's supposed to go out and execute these deals.
Terry, finally, all of this conversation on tariffs and the activity we're seeing in financial markets today, which I would point out the NASDAQ 100 right now off of session lows, still down, though, 5 full percentage points. The S&P down by about 4.5%. Seems to have overshadowed what happened on Capitol Hill earlier this morning, which was a successful vote in the House to pass the budget blueprint that was passed by the Senate, advancing forward the budget reconciliation process in the aim of achieving President Trump's legislative agenda, which is expected to include sweeping tax cuts. We keep hearing from this administration, tariffs are just part one. You have to wait for the second half of the economic policy. And I wonder how that factors in, although I understand now that President Trump is taking questions from reporters from the cabinet room at the White House. So let's listen and watch live on Bloomberg TV and radio.
I think Scott went out. Scott, you want to have a statement on that?
Sure. Look, the up 2, down 1 is not a bad ratio, or up 10, down 5. And I think as we have talked about, as we go through the queue and settle with these countries who are going to bring us their best offers, we will end up in a place of great certainty over the next 90 days on tariffs. But we had very good inflation numbers today. Oil's down. We had a successful bond market, so I don't see anything unusual today.
And next steps for China, sir?
Well, we'll see what happens with China. We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. They've ripped us off beyond nobody. How people stood for it, sitting in my position, is not even believable. And we're talking about many presidents, not just a couple. But they did, and all we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries. I look forward to it.
Mr. President, China retaliated today by reducing the number of American films that can be shown there. What's your reaction to them now targeting cultural exports from the United States?
I think I've heard of worse things. Yes, please.
Also on China, the Ukrainians say they have evidence that Chinese soldiers have been found fighting for the Russians in Ukraine. Can the U.S. verify this? And if so, what does the U.S. plan on doing to China to counteract that?
We'll look into it, but I think beyond that, we're really looking to get that war stopped. They're losing 2,500 and even more than that young people a week. They're Russian and they're Ukrainian. They're not American, but they're people. And we're seeing if we can get it stopped. And I think we're making progress. I appreciate the ballerina who was released. It was at the request of a very good friend of all of ours, actually. Dana White called me and he said it's the friend or the relationship of one of the fighters for UFC or one of the fighters. And Dana's an incredible guy, and we spoke to President Putin about it, and they made a deal. They released the young ballerina, and she is now out, and that was good, so we appreciate that. We hope that we're going to be able to make a deal relatively soon with Russia and Ukraine to stop the fighting. It's so senseless. It's such a horrible thing. It would have never happened if I were president, but it did happen, and we were given that card. And I think we're going to get it. I think we're going to get it stopped. Got to get going. We got to get it. We have to move it faster. Likewise with the hostages, we're making progress. There's 59 hostages, but only 24 of them are living, and that's the way it's been presented to me by the mothers of some of the dead, mothers and fathers of some of the dead hostages, and they want the bodies of their baby, as they say, their baby, their young boys. They want them back as much as if they were alive. It's amazing, because when I met the hostages 2 weeks ago here, I couldn't believe what they had to go through, by the way. But when I met them, they said, yeah, there's 59, but 24 are living. And they actually consider, I guess if you're a parent, you do consider it this way, that the remainder who are dead, the 24 that are alive, the remainder that are dead, they want them back just as much as they would want them back if they were alive. It's really pretty amazing and pretty sad. So we're getting close to getting them back. We have a lot came back. A lot of people are very grateful. Some came back in pretty bad shape. Some came back, they're okay. I think they're going to be scarred mentally for a long time, because if you sit down and talk to them, as I have, what they went through is incredible. But we're making progress. We're dealing with Israel. We're dealing with Hamas, and it's a nasty group.
Mr. President, so how close are you to the first country coming to actually make a deal with the United States over tariffs? Is it days, months?
Well, I think it's very close, but we have to have a deal that we like. We don't want a deal that's going to be a bad deal, or I could make every deal in one day if I wanted to. I could do this in one day. I could just say, here's what we'll do. And I was saying to the people before, to Scott, mostly to Scott and Howard, and some of the other people that work with us on the negotiations. We have a lot of law firms that have paid me a lot of money in the form of legal fees. We're going to probably use those firms to, if we can, I think we can. I'll make a contribution to the country, but they're great firms. They're the best firms, the biggest, and really the most prestigious. And we may be using them to help you guys out, because you're going to need a lot of lawyers. And I'm not sure Pam's going to be happy if I say, can you send over about 200 lawyers that work on trade? She's working on criminal stuff, and I think that's going to be her focus more than anything else. So we'll find out if we can do that. But we have a lot of lawyers that you've been reading about, where they paid $100 million a firm on average. Now we have the final 4 or 5 are at $125 million. So I have a lot of legal fees I could give to you people, and we might as well use them. Hopefully I won't need that many legal fees or that much. I may. Who knows? After it ends, after we leave, maybe I'll need it. But if I do, it's not going to be very pleasant. So I think we're going to try to use these very prestigious firms to help us out with the trade, because we have a lot of countries, but we want to make deals that are proper for the United States. Not just we can make deals easily. We want to make them proper.
Mr. President, if you aren't able to reach the deals that you want to see at the end of the 90 days, will you put those higher tariffs in place, or will you extend
that's what would happen. I mean, if we can't make the deal that we want to make, or we have to make, or that's good for both parties, it's got to be good for both parties. And then we go back to where we were.
You go back to the numbers that you announced last week.
I think so.
You wouldn't extend the pause?
Yeah. We'll have to see what happens at that time.
Thank you, Mr. President. You said yesterday you were considering some exceptions for companies. Can you talk about what you're considering? And then also on the reciprocal tariffs, that it'd be substantially lower. Is the same math formula going to be used, or is that tossed out?
I'm not considering now for any country or company, but it's possible that I would. But I'm not. We don't have that situation right now. People understand where we are, what we're going to do. But it could happen. It's called flexibility. You have to have certain flexibility.
What are you planning on using the money that you're gaining from revenue through the tariffs on?
Paying down national debt, reducing taxes, creating good budgets, helping Christie with the border and all of the other things. I built hundreds of miles of wall, as people now understand, 571 miles of border wall in the first administration. But we're going to beef it up, and we're going to add more. And, the numbers are incredible, really. The numbers are what's taken place. We had great numbers, but these numbers are topping my last administration. And Christie and Tom Homan have done an amazing job. But it's an expensive process. This weekend, where they used to have hundreds of thousands of people standing there pouring through the border in Tijuana, Mexico, this weekend they had nobody. You had a man sweeping this massive piece of concrete, which is, the area where they said massive. And I've looked at that during the Biden administration. You couldn't see a piece of that concrete. There were so many people on it. You couldn't, if you had helicopter shots, you couldn't see concrete. Now, this weekend, you had nobody there but a man with a broom sweeping it and cleaning it up. Pretty amazing. It's really an amazing job. But But it will be used for that. It'll be used for a lot of things. It'll be used by the Department of Justice for doing a great job. Pam is doing a fantastic job. So it's going to be used for a lot of different things.
Mr. President, on a 10% tariff, is that a basement? Is that the
It's a baseline.
Can countries negotiate that to bring that down?
It depends on what they're adding. You know, some countries we have massive deficits with, or they have big surpluses with us. And others it's not that way, so it depends. That's why it's really they're all different. Every country is different. Some have certain advantages that others don't have, and certain things. We have China has a surplus of $1 trillion. I mean, the numbers are crazy. And others have basically no surpluses. You know, we have some that are pretty even, but they hurt us in other ways, and we just want to get that taken care of. So everyone is a little bit different.
So are you negotiating with the EU as one bloc or individual nations for the tariffs?
We're looking at it as one bloc. They've been very tough, but they were very smart. They were ready to announce retaliation, and then they heard about what we did with respect to China and others, but China. And they said, we're going to hold back a little bit. They decided to hold back. I thought they were very smart. Look, the EU is very smart, but they really have taken advantage of the United States. They were formed for the purpose of taking advantage of the United States. And I don't blame them, and I don't blame China. I don't blame anybody. I blame the people that were sitting at that desk in that other beautiful Oval Office for allowing it to happen. Many presidents I blame. They should have never allowed it to happen. And I'm doing something that a lot of them wouldn't want to do. But I'm here, I do those things, and we're going to make this country great again. We were taken advantage of by almost everybody. I sat back in the last administration. I would actually read them. I don't have to read them now. I know them so well. I would read some of these documents that were signed, deals, and I said, who would do a deal like this? Who would do it? You've seen it, Elon. Yeah. I'd look at deals where it's so one-sided. Even we have a deal with Japan, and we get along great with Japan, and we had the Prime Minister here. He was fantastic. As you know, Abe was great. Shinzo was great. He was a good friend of mine, unfortunately no longer with us. But we defend them, but they don't have to defend us. I said, that doesn't sound too good. But we have a deal, a defense deal. We pay hundreds of billions of dollars to defend them. But if for any reason, in other words, we pay all the money. They don't pay anything. But if we're ever attacked, they don't have to do a thing to protect us. I said, well, that sounds like a wonderful deal. So that's just one out of thousands. And I just wonder who did this. And it's people that either hate our country or didn't care, an expression that you use. I think it's really a lot of them didn't care. It's just hard to believe how bad they are. Now that's a little bit of a defensive deal, but I'm talking about trade deals, the same thing. They're so bad, you would say, how come? And even when I'd renegotiate, like I'd go to a country, they'd give me everything I asked for. I said, why didn't somebody ask for it like originally? They give me everything. I think when they were negotiating, they didn't care, or they didn't ask, or they were shy, or they were very stupid, or they hate our country. Yeah, go ahead, Jeff.
You were speaking about Japan. Can you clarify what your vision is for U.S. Steel? You referenced it yesterday.
Yeah.
There are some questions about what you actually want to see
Sure.
out of
Look,
that.
U.S. Steel is going to do very well now because of tariffs, and I don't know why they even need a deal. But the only thing is U.S. Steel, if you go back 80 or 90 years, that was a behemoth in this. That was our biggest, most... if we were around, we would have been very proud of it. Today we have different types of companies that are big. Google, it's not the same as U.S. Steel, and I love Google, and I got to like the people that run it. They're very capable people. They didn't like me so much in the first administration, but they like me a lot now. I don't know what happened, but I like them. But I think they would be the first to admit when I envisioned. You look at some of those steel factories from 90 years ago. It was a different kind of a country, but they were miles long. Today you see just empty hulks. Those hulks are going to be filled up very soon because of what I'm doing with tariffs. It was a different kind of a thing. But if I didn't do that in the first term, my first term, if I didn't put tariffs on, we would have, because China and others were dumping steel, billions of dollars of steel. Our steel companies were all closing. We wouldn't have one steel plant open. And now we have a steel industry that's doing very well, but soon it's going to be thriving, really thriving. And those factories are going to be filled up, but more importantly, they're going to build brand new ones. Nucor and so many other companies call me, Nucor being a big steel company. They're building massive new steel plants, and it's great. And likewise, car companies. We have many, many car companies. 3 of them, I'm not looking to hurt Mexico, and I like Mexico. And by the way, I think the new president is a terrific person, a fantastic woman. We've had many conversations. She's a very elegant, just a fantastic person. And she's been very nice, very, very nice. But I'm not looking to hurt them, but we have 3 car plants that were under construction in Mexico. They stopped constructing, and now they're going to build in the United States because of tariffs. See, we should have never let this happen, because whoever it was that was president at the time, we lost 90,000 plants and factories since NAFTA. 90,000. It's not believable. How about that, Laura? You know, you're in that sort of world of factories and
build back
plants.
Manufacturing, construction jobs, bringing those workers back home.
That's right. We're going to bring them all back. But think of it, from that period of time, which isn't so long ago, we lost. I said the other day, if you had a map on a big wall like this, and if you had pins, 90,000, I don't know if you'd have enough. I don't think you'd have enough room on the map to put the pins. 90,000 factories that we've lost since NAFTA. And it's not even, and about 6 million jobs, but really, I think probably a lot more than that, but they say 6 million jobs. We're going to bring many of that back. I think we're going to bring more than all of it back. We're going to be better and stronger than ever before. But if a president, when they were leaving, said, look, you can leave, but if you're going to build a factory someplace else, and you think you're going to come and sell your steel or your car or any product that you make, your pharmaceuticals, which we're going to do, we're going to get them all back. But if you think you're going to just, all they had to do is say this, and they wouldn't have left. You know, I said it the other day. I said it with respect to, I made a speech a year ago, and I told them if I win, we're going to charge a big, big tariff at the border. And people were thinking about building in Mexico a car plant. And I said, we're going to have a big tariff. So if you want to build a car, you're going to have to pay 25% more than the cost of that car. You're going to have to pay 25% tariff at the border. They would have never left. They could have kept everybody. If a president said, if you leave this country, you leave Michigan, you leave Detroit, you leave anybody, any of our states, because to me they're all the same. I love them all. I love them all, and I probably won them all, but they say I won most of them, but I think I won them all, but that's okay. But all you had to say if you were the president is, if you leave and you think you're going to now fire all those workers, leave all that, everything behind, and you're going to build in another country and sell it and no, you're not going to. You're going to pay 50% or 100% tariff. They would have never left. And all you had to say, Marco, all you had to say very simply is, you don't have to write it down. All you have to do is say it verbally. If you leave, you're going to pay 100% tariff. Therefore, don't leave. They would have never left. But they left 90,000 plants. I mean, it's hard to believe that many. It's not, you can't envision it. So just getting back to your, because I'm the great weaver of all time. To weave, you have to be a genius. To go on tangents, anybody can do that. But we'll get back to your original U.S. Steel. U.S. Steel is a big name in this country. It's Babe Ruth is a big name. We have a lot of big names, but not too many. U.S. Steel is one of the great names in the history of our country. And normally I wouldn't mind so much. I wouldn't be thrilled with it. But to buy for a foreign country, and we love Japan, but for a foreign country to buy that cherished U.S. Steel brand, that's hard for me to do. Somebody else may want it. The company Nippon that's involved with it is a big, powerful company who do a good job. But why can't they just build a plant themselves? I mean, why do they have to, take U.S. Steel? So as you know, I rejected the deal. Now they've come back in a different form. They're coming back as an investor. And I feel better about that, I guess. But, I know them very well. I know the thinking. It's the investor. They'll invest, and somebody else maybe is sitting in this chair, and they will no longer have an investment. They'll have the whole thing. That's the way it works. They're very smart. They're very, very smart people. We're dealing with very smart people throughout the world. Great geniuses, actually. Look what they've done to our country. And again, I don't blame China. I don't blame anybody. If I could have done it, if I were in that position, I'd have great respect. I have great respect for the people. They ripped off the United States, and all we had to do, have a president that knew what the hell was going on, and none of those countries would have left. Those companies, none of them would have left. So that's a little lesson in basic business. And it's really basic business. It's not complicated business. It's very basic business. And we'd have every one of those car plants going just the way they were 30 years ago. None of them would have left, but now they're coming back.
Mr. President, the Labor Department has confirmed that $400 million went to fake people for unemployment benefits.
Yeah.
Just what are your initial reactions?
I think it's terrible. I just heard it from Lori, and I appreciate it, and you heard it from Elon's people, right?
That's right.
Elon's done a fantastic job. Look, he's sitting here, and I don't care. I don't need Elon for anything other than I happen to like him. But I'm telling you, this guy did a fantastic job. I don't need his car. I actually bought one and they said, "Oh, did you get a bargain?" No. I said, "Give me the top price." I paid a lot of money for that car. But honestly, he makes a great car. You know what I do with it? I let the people in the office drive around in it. Margot and Natalie, they're all, Chamberlain, they're all driving around the most beautiful car. It's gorgeous. But I did that as a sign of, just a show of support. Numerous people have done that. Just a show of support. Because, he's done a fantastic job, but he hasn't been treated properly. Hasn't been treated properly, yeah.
Mr. President, can you talk to us about your communications with China? Has President Xi reached out at all since the tariffs?
Well, I don't want to say who's reached out. I just say that I think it's going to work out, hopefully well. They're very big. It's hard to get over, if you're me, what they've done to our country. They've destroyed our economic base to a large extent. The good news is we're very vibrant, and we're going to get it back fast. We already have. Look, we're making $2 billion a day now, and during Biden, we were losing $3 billion a day. Biden was a disaster. He was the worst president in the history of our country. And to me, worse than that, because the money you can make if you have the right guy in this position, worse than that was what they did on the border. By allowing the jails of the world, not South America, all over the world, to be opened up so that we take everybody from Africa, Asia, South America, Europe, the bad ones. They opened up their jails and they dumped them in the United States. And now this beautiful young woman who seems to be, boy, she loves what she does, though. I think she loves what she does because she's a patriot. She hates to see it. And Tom and all the people. But for us to spend, hundreds of billions of dollars this is just, I don't know. They either hated the country. Who would do this? Who would want millions of people to pour through an open border? We have no idea who the hell they are. And just walk right through. And half of them, whether you like it or not, you could look at them and you could say, they are not going to help us. These are some rough people. But they'd empty out their jails, and they'd empty out their mental institutions, insane asylums, and they let them into the United States of America. And inflation we can fix, and all of the other things we can fix. We'll get it going. But this is something, it's such a horrible thing, and it's really hard. We have to do deportations. Now we're doing self-deportation. We're coming up with all sorts of ideas. And they must have known it's not going to work out well. And, you know, we want people to come into our country, by the way. We need them badly for the jobs. But we want them to come in legally. They have to come in legally. They have to show that they can love our country. Thank you very much, everybody. Thank you. Thank you very much.